This is Warren. Warren is a wealthy stock market guy. He wants to offer Forex market training and signals to day traders like Tim. This is Tim. Tim is a trader. He wants to expand his knowledge in the markets in a community-based environment. But Warren and Tim are on two different sides of the world. Warren wants to build a community exclusively for traders. Tim wants to join a community just for traders. But their problems are solved when they use CurrencyGodz.com traders platform. It's efficient, it's hands-on, it's exclusive, it's our home. CurrencyGodz.com. Here, Tim finds an exclusive community just for traders. And Warren gets the opportunity to connect him with traders around the world. It's efficient, it's hands-on, it's exclusive, it's our home. CurrencyGodz.com.
All right, everybody. Welcome to Currency God's 3-day boot camp. This is day one. All right, on day one, what we're going to talk about is money management and also some risk management. So we'll be going through both pretty much in detail. Everything that you need to know, you'll find out in this video. In the beginning of your training, it's going to be majority. In the first stage, it's going to be money management along with risk management, so you'll get a feel for both. You'll learn how to calculate risk as far as spreads, as far as risk management, risk-reward ratios, and you'll also learn a new special indicator, but it's also a traditional indicator that a lot of traders use. You'll use that and bring that to your arsenal along with very, very fundamental basics that we use already in our trading every day. So we'll apply those theories along with a lot of new ones. But majority of the time, I'm going to be showing you guys how to manage your money by managing your risk. So this is a trading plan blueprint and also the start of becoming a profitable trader. So let's begin. All right, hello and welcome everybody to Currency God's 3-day boot camp. All right, our goal and objective for this boot camp is to help you create a profitable trading plan. All right, so with a trading plan, it allows you to actually take advantage of the market and the current market conditions. It actually allows you to set up rules and certain structures that you follow before you actually place your trades. So if the market isn't doing certain things that you know that it should be, you don't place those trades according to your trading plan that you will learn and start to incorporate within your trading. So you have to just pay attention. I suggest everyone take notes. Each slide that you see come on, take a second and pause it to write down the notes that you see in the pinpoints. All right, so the first thing is the reason for your trading plan is to incorporate all four aspects that make a profitable trader, which we'll go through and break down each aspect. So the four things you must master first is money management, to be able to manage the funds that you currently have. So that doesn't mean just being able to retain the funds that you have, but be able to duplicate the little funds and make them more. Without being able to do that, and you won't be able to, without being able to manage your money, you won't be able to duplicate it. So we have to learn to manage our money. The next one is the psychological mindset. You have to have the mindset to know that the market isn't always going to be in your way and in your favor. You got to know when to cut your losses and what to do if you have to figure out another way and another solution because the situation got out of hand. All right, so the next thing is also technical analysis. Now, technical analysis is also basic support, resistance, channels. There's pretty much a lot of things that you can use. Elliott wave, you can use. There's a lot of different patterns and things that people look for in the markets. But right now, what we focus on technical analysis is our price action. So we let price determine the direction. We don't place any trades based off of just guessing. We only let the price determine the direction and we simply follow it. Next thing is the fundamental analysis. Our fundamental analysis is pretty much the backbone and the structure behind a lot of currency that we see move is because of the news. Pretty much a lot of people know that I teach reflexivity also, but we won't get into that in this subject. But cause and effect generally causes things to happen in the news. All right, so let's just take a few minutes to break down each each key thing that we must master first. Let's kind of go over it a little more. So the first one I want to kind of go over, especially, is the money management part of becoming a profitable trader. You got to understand that money management is crucial. So understanding that if I'm risking 3 to 1 risk or reward to risk ratio, which means my reward would be 3 times greater than what I'm risking, it's pretty much in my favor. So I know that as a money manager, I got to calculate these certain things to figure out the correct algorithm and the correct way to approach each individual trade, because each individual trade is going to be different. They're not all going to be the same. So you have to understand that, and being able to manage your money so that you're not blowing your accounts. You got to be able to sustain the whipsaws and sustain the natural movement of the market. So we want to definitely pay attention to that. The next thing, again, is the psychological mindset that you must have to be a profitable trader. Because a lot of times, we get a lot of outside influence that it's hard for us to really focus on our craft and our trading. It kind of gives us that doubt. And the psychological aspect actually is why most people fail, is because they can't take the mental pressure behind trading. So you actually got to keep your mind like bulletproof pretty much, and be aware of that not everything is what it seems, and only you know the truth of what's going on. And another thing that we got to stay away from, which I'm going to kind of touch on, is that we trade for profit. We don't trade to be right. It's not always about being right when you want to become a professional and a profitable trader. It's not always about being right. So we got to understand that. Then the next thing is technical analysis. So pretty much technical analysis, again, is this general support and resistance. You got things like channels, Elliott waves. There's a lot of different ways to do technical analysis. You can use indicators and price action. So what I'm going to get in touch on, actually, day 2 of our boot camp, is the technical analysis and the price action, but also will incorporate an indicator to allow us to know how the market is reacting. So that's something we'll be able to use as well. So the technical analysis, again, it's giving us a hypothesis of what we think is going to occur in the market. So then again, it's an educated guess. So we got to definitely understand that aspect of it. The next thing is our fundamental analysis. Now, the fundamental analysis is very, very important, because the fundamental analysis happens every day. You see fundamental analysis on the news. When you watch TV every day, the market moves, you know. So we got to definitely pay attention to our media and what they're saying about certain things. As far as like the Middle East, we know the Middle Eastern and things like that affect our oil prices. So our general purpose as profitable traders is to be able to capitalize off things like that. So we actually have to understand the cause and effect of things that occur in certain areas and for those certain reasons. So we want to take advantage of those things and capitalize off of those. So that's generally everything that we're going to cover in this chapter of our bootcamp. All right, this slide, money management. All right, let's first start off by just identifying the fact that we're going to use 2 brokerage accounts. Now, there's a few reasons why we use 2 brokerage accounts. I'll pretty much get into that. But the first thing is, I know a lot of people are going to have questions. Do I have to create a whole new brokerage account with a whole new broker firm? The answer is no. Whatever brokerage firm you currently are with, it should allow you to add another account to the current one that you have. But if you have any problems, I know for a fact Traders Way allows you to have that second account. All right, so the first account is called the active trade account or your ATA account. The ATA account is for all your daily activity, all your weekly trades. They'll be placed in this account. Then you got the second account. It's called the long-term investment account or your LTIA account. It acts as your personal account and your savings account. This account you use to withdraw all your profits from. All right, our active trade account or your ATA account. So again, you'll use this account to place your day trades. So keep in mind that we don't ever withdraw from this account. Only internal transfers to our LTIA account. We do not want to lose money due to the fees or the wire costs, so we avoid withdrawing from this account at all costs. So as a profitable trader, you'll only risk about 10% of your entire ATA account on one single trade. So we never want to go beyond risking 10% of our entire ATA account on one single trade. So we want to keep that in mind. Sometimes we see a lot of people over leverage their accounts, and stuff like that. And we know that's not profitable trading, because trading pretty much is about the long term. How can you create a passive income, create that longevity within the markets between you and yourself. So we want to definitely keep that in mind. We never want to risk more than that 10% of our entire ATA account on one single trade. So again, our next thing is just an example of the 10%. Let's say, for example, you have a $100 account balance. So your maximum risk on one single pair, let's say USD/JPY, that 1 or 10% risk only be about $10 that you're able to risk on that single pair. So we really want to be aware of that and that risk to reward ratio, because that's really going to play us a good play actually. Because let's say our reward to risk ratio should always be 3 to 1. Now, an example, the spread for Euro USD is 3 pips. Now, let's say we're scalping and we want to scalp for 8 pips in total. So that means we have to catch a total of 11 pips to be able to create that 3 to 1 risk to reward ratio. And if we want to risk more, or if we want a better reward, then we're going to risk less, of course. So that's kind of what we want to take into play. So the very last step that we also want to remember for our ATA account is that at the end of every trade week, you send 20% of this entire account to your LTI. All right, now your long-term investment account or your LTIA account. Your LTIA account acts as, again, your savings or your checking account. You'll make 2 withdrawals a month from your LTIA account. But first off, let me tell you why we use the LTIA account. Instead of a conventional day-to-day regular savings and checkings account where you only earn 1% interest on it, pretty much you can use this account for those long-term investments that you always had your eye on that you wanted to take. Like for instance, mine is gold. I'm investing long-term in gold. That's what my LTIA account is for. But you want to start this account early so that you can start to change your style of trading as the years go on. Majority of us actually trade so that we can eventually take those long position trades for an entire year or two, just holding that currency, either buying or selling it. But that's the point of our LTIA account. It enables us to be able to take those bigger trades that we only dream of. So we start early. As a profitable trader and our money manager of your own funds, you pay yourself a performance fee of 20% of your profit and out of your LTIA account twice a month. So the 20% of your own profit, this is basically you paying yourself first. This is your performance fee that you're paid. Basically, you paid that one time that weekly 20% that you take already out of your ATA account and that you send to your LTIA account, you got to think is already doubled. 4 times you sent it, weekly, that's 80% of general profit that you sent. And every 2 weeks, you're going to take 20% of the entire profit of the LTIA account twice a month. You can now create your own withdrawal schedule. For instance, the 15th of every month and the 30th of every month would be something that you can do for your own withdrawal schedule for the LTIA account. But again, this is just so that you can get used to paying yourself and also creating that passive income as a trader. Your long-term investment account again is that account that you really want. Use these funds for that big ticket item that you want. But that creates that passive income for you. It's for that passive income investment. This is basically like your nest egg that you're starting to create within the investment world and investment industry. So the next thing is this account is pretty much your safety net. For the worst case scenarios, like a blown account. To prevent this and to keep the performance steady, this is how you're going to be able to keep that performance steady, constantly have that good ROI, return on investment for yourself at least. You can be able to structure everything business like because you got to think your trading is a business. You got to approach it this way. This is why money management is important, but it's the most overlooked thing when it comes down to trading because nobody approaches it as their business. You're not really realizing the full potential in it until you actually approach it as your business and this is your company. So you have to keep your business alive. You can't blow your account. And if you blow your account, you got to have that safety net for the worst case scenario to where you're only doing an internal transfer into your account because we want to always avoid losing money. As money managers, we want to make sure that we can get the best deals possible. And that's just how this is how we become more profitable daily and daily and daily. Now, the next thing is apply an additional 5% on all weekly profit from your ATA account that had a daily gain of more than 10%. So, 5% a day keeps the, job away. It's as simple as that. But you got to think when you have those 10% gains and those 10% daily gains, you should be putting some of that up for those rainy days, that. So again, if you have more than a daily gain of 5% or 10%, you need to put an additional 5% away into this LTIA account from your ATA account. So we got to really, really do that, and that'll help us in the long run. So initially and overall, the purpose of the account again is to build that long-term passive income. We want to create that long-term passive income so that we don't have to worry about blowing an account because we created that safety net for ourselves. So again, you remember we withdraw twice a month, from our LTIA account. We never withdraw from our ATA account, just to avoid those fees and stuff like that. Again, so you come up with your own withdrawal schedule. This account, again, is for those long-term investments, for like those position trades that you always been dreaming of taking and stuff like that. And again, if you create more than a 10% gain, daily gain, actually add an additional 5% to put in your LTIA account. So that's then. All right, let's get into the session breakdown. That way we can properly manage our risk. All right, so first, let's start by assessing the different time zones and the different currency pairs. They all have a direct effect, occurring during these certain time zones. So if we look at, first off, London session, which would be 7H to 13H GMT, or 2 a.m. to 8 a.m., just depending on where you are. 2 a.m. to 8 a.m. Eastern time. So when we're during London session, we mostly want to focus on our European pairs. So we want to focus on stuff like Euro USD, GBP USD, mostly these dominant European pairs because they're going to have the most movement during these hours. So again, during the London session, which is 2 a.m. to 8 a.m. Eastern time, at least on our pairs to trade will be Euro USD and GBP USD. We also trade gold during the London session, but again, that's all because of volatility. That's when we see the best movement during that time for those specific currency pairs. The next is the New York session. So the New York session is 13H to 17H GMT, 8 a.m. to 12 p.m. Eastern time. Now the pairs that we trade during the New York session usually varies. It really depends on your style and how aggressive you are and how aggressive you want to be as a trader. Now, we don't want to trade a flat pair, like we don't want to trade a European pair during New York session unless it has a dominant US pair, but we wouldn't want to trade GBP USD or GBP JPY during the New York session because it is not a dominant pair. It wouldn't move much. So the pairs that we look for during the New York session, for instance, want to be like AUD USD, the Australian dollar versus the US dollar. Something else, another pair would also be like USD CAD, the USD JPY would be a good example for a currency pair to trade during the Tokyo session, which would be about 5 p.m. Eastern time. You want to focus on more of Japanese yen pairs when you're actually trading during the Tokyo session. So actually just take into account the just accountability of each country. They're actually going to be using that currency at that moment. So all right, that's the end of Bootcamp Day 1. I'm going to open the floor for questions now. You guys ask as many questions you want. We're going to spend 30 minutes now going over the material. You guys ask as many questions as you like. Again, I just want to thank everybody for taking the time to actually go over this with me. I guarantee you this will take your trading to the next level if you actually spent that time learning. Just again, focus on being actually profitable and not always being right. Success lies not in winning, it's the ability to minimize losses. Next, you'll learn the corrective action to end a bad trade or turn it into a break-even trade. So we're going to actually take some time to actually go over the markets over this next session. So day 2 is more actually us on the charts, seeing the charts for what they actually are now that we actually got this money management plan set up. So again, I'm going to open this floor for questions for everybody. If you're actually just watching this video, I just want to thank you for watching. Reach out to me with any questions. If you got any concerns about anything, you can email me, currencygodz2016@gmail.com. I will get back to you as soon as possible. So